Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, 18th of August, Friday, last day of the week, and today 4.3 million of options units expired as third week option expiration for August is due today. So be careful because we are seeing a lot of weird, sneaky, choppy, and volatile price action today. And given the fact that this week we've been 3 days in a continuous selling pressure, 3 red days, be really careful because manipulation is across the board. But let's start directly straight into the charts because there's no news for economic data today. So we are going to perform deep technical analysis in the Nasdaq and in the big tech stocks along with dollar and yields because those are key for understanding why the sentiment is the way it is today. So as you can see, we were expecting this pivot to resolve. This pivot at 14,800, and yesterday we broke that down. I uploaded the video saying that we were finding support, but no, we finally, at the end of the day, we had a spike to the downside and we entered this range that we got here in early June that goes through 14,000, let me tell you, 14,430. So we have a lot of range down here. It was really not the case to reach this downside of the rectangle of the range, but for sure we are right now in the middle. Today we are in the red, slightly in the red for the Nasdaq minus 0.40, basically a slightly bottoming tail hammer. Well, perhaps, but we have to check the intraday moves and most important, how we end up the week. Because the weekly, it's quite 3 weeks straight in the red and Nasdaq has lost like, let me tell you, where it's, since the open, we have lost 7% in 3 weeks. So what we initially thought that was a slight pullback for continuing higher for all-time highs, it's more than a pullback. And we have to change our tone. We have to change our sentiment due to that and be nimble, be flexible to trade in these markets because what initially appeared to be a slight pullback, we are now in another kind of structure, as you can see below the ascending support that we got, below the 20 moving average on the daily and also the 50 moving average. And the tone has to change to adapt for that. This is yesterday's price action. As you can see, the spike to the downside was really interesting and provided us the opportunity to assess better today, the last day of the week and options expiration. So what we got today, yesterday's close still finding resistance today, and we broke down initially. We tried to go deeper, sellers committed to that, but we found buyers here. So there's no clear point area level. We just have to go to the intraday to see why buyers are stepping in. As you can see, a lot of bottoming tails in the 5 minute. In the 1 minute chart, the open was unbelievably choppy. Look at this. And the S&Ps was barcoding like crazy. Look at this. So finally, bulls are obtaining more and more terrain, trying to push higher, but the day is not clear. We are pushing higher. We are still in the red because we gapped down a lot in pre-market, but the day is just choppy and choppy and choppy. And this is most probably due to options expirations. Max pain for the S&P 500 is 434. And right now we are trading at 435. So Wall Street, it's pinpointing that, and not letting the market move due to that. But that's only for today. We have to gather information for next week, because next week the tone might be different. And before moving to the forecast for next week and what kind of move we might see on the daily, let's recap on the tech stocks. Apple, as you can see on the daily, we filled this gap yesterday on the move down. So this gap is gone. We have a huge gap below 170, but I really think buyers are stepping in. We got the bear flag resolution, first push, consolidation. We can see that better on the 2-hour time frame. Let's just see this consolidation. The longer the amount of time we spend consolidating, the bigger the move down, but we are finding buyers. This is Apple. This is not your small cap stock. This is Apple. And I think buyers are not letting Apple enter this gap. They are not waiting for 170, so they are just buying down here. So quite interesting gap filled and buyers. Apple is 0.24 on the day. The only green name is not as choppy as the rest of the market. We started calling up and we are pushing, following more or less the 45 EMA on the 1 minute. But the rest of the market is all red, the big ones. Microsoft is in the red, also filling gaps. This is one of the key things that we have to understand and really take into account, because all these names are filling gaps that were left behind in the intensive move in 2023. So filling these gaps correct some of the price action and let other buyers, provide other buyers the opportunity to come in the market. And that's really good. This is the kind of correction we need to pay attention to. Microsoft minus 0.14, not a big 14, not a big red day for him. So reversing the gap is just enough to consolidate and to hold these levels. Tesla 1.70, super choppy today. They tried to push down, but look at these buyers. Again, Tesla is one of those names that is filling the gaps. And as you can see, we fill this gap. There are a lot of gaps behind on Tesla. The next one is 209 to 207. And then the next one is 195. But I think at 200, around 200 level, a lot of investors will jump in. We will have to wait and see. But look at this, minus 1.76 for Tesla, not because after open price action, but due to the huge gap down and after hours move. Look at this Tesla. They are trying to hold levels. Amazon, also, as I said, trying to fill the gap. The gap was moved yesterday on this, and now today we are moving that even lower. So the gap is being reduced quite a lot. This gap was due to the earnings on 3rd of August, and this is the chart of a stock that is not able to hold these levels after earnings. It's quite clear that Amazon is not able to hold these levels. And the most probable outcome is just to fill the entire gap down. So the rest of the gap until 130 is the most probable outcome for next week, just to sweep the lows and start going up. This gap will provide better opportunities for buyers to jump in and maybe to reclaim the 20 moving average on the daily. There's no more gaps for Amazon until way lower down here around no, let's see the exact names, 108, gap fill 106. So we have quite a lot of space with choppy price action. We have clear levels and the moving average. So I think the next big level, if we gap fill next week, it's 126. I will say it again, a lot of these tech stocks are filling previous gaps to the downside that were left in the huge run in 2023. So be careful if you're trying to short those, because I think a lot of players participants, small investors, big investors, swing traders are going to jump in these opportunities, in these pullbacks. That's something you have to really pay attention to and take into consideration, because I don't think they are going to just flash to the downside and lose all value. At some point, big participants, big investors will just buy that dip for the long term. Google. Now we got Apple, Microsoft, and Amazon. We are going to see big red on Google, Nvidia, and Meta. And as always, Google, it's filling the gap that were left behind on earnings. Again, earnings huge jump, and we're trying to hold. Look at this, the close, it's fighting with the lows on the range. We tapped the gap, but we rejected, and this is not the kind of gap fill that you expect. You expect to just go insane into the gap fill and then insta buyers. This kind of price action is not super strong, so I would consider next week to continue filling the gap slowly. We might see a partial gap fill, but this kind of level around 124, 125, I would expect buyers to step in. I don't think Google is going to fill the entire gap at 123.69. So more on that. Nvidia is quite tricky, because when we try to go down, look at this candle on Monday this week, 7% in the week. So when buyers step in at these levels, it's not huge volume though, but again, bottoming tail. And we have a small gap here, but this is the huge gap on earnings. A lot of buyers will be waiting for Nvidia to just tap critical levels, and not even the gap fill at 366. We have 400. The low on this day was 403. I think people were waiting for Nvidia to reach 400 psychological levels to just buy in. That's as simple as that. And that kind of thing, you have to start paying attention for investors, for swing traders, for long-term acquisitions. Nvidia was dipping and they bought the hell out of Nvidia today. Nvidia's in the red due to the gap down on pre-market, but since the open is in the green, and Meta is also in the same kind of situation. Meta on the daily filled already previous gaps. This consolidation is no longer valid, but previous resistance, now support, is being held. 276, it's being respected and it's being bought up. We are leaving this gap behind. Let's chart it right now. So we have this gap down today on Nvidia, and I think part of the reasoning, it's, give me a minute, gap fill and gap fill. So these kind of gaps need to fill, and we are bouncing from a level and not filling the gap from today. But again, next week we might see that gap being filled. This is the gap that we are leaving behind, and let me adjust it a little bit because I think it's not as clear. Say that one. So as I said, a lot of names are filling gaps and people are buying slowly. That's why we are seeing this choppy price action. We are seeing this volatile, choppy, range price action because sellers are piling in the move down for a big correction, but long-term players are not letting these values go. They are buying in for the long term. They are swing trading. They are buying value because they think that these tech stocks are a good price for them. That's the deal. You could agree or not, but this is what we are seeing across the board on the Nasdaq. What else we are seeing? Banks are mixed sentiment. JP Morgan is the only one in the green, but Bank of America, Wells Fargo, banks are not in a really good situation. If we check the XLF, we are waiting for this move up, but now that The Federal Reserve is regulating a lot of these banks. They are just losing value. They are not going down heavily, but they are losing value. They don't financials right now. It's not being bought up as XLK, for example, it's trying to do. XLK is doing down, but we are sitting at support right now on the sector fund. So take that into account, because at some point buyers for the long term will just buy, invest for the swing traders, for the long term, for the portfolio, for the 401k. And that's what I think it's happening today. Let's change now to the dollar. I was waiting for this kind of move. I still think dollar has legs for 105, but this rejection today means that maybe this is not as strong as we initially thought. Everyone was freaking out after the yields were pushing 2007 levels at 5% in the 2-year yield. We rejected again. Look at this detail. I put on the close, not on the wick. I sometimes put on the close the levels 5.908, 985, and we didn't close any of these candles above that level. They are defending this. And I think bonds markets are hesitating at these levels. They don't think the yields are continuing super higher. They think they will be higher for longer, but maybe the Federal Reserve is not going to hike in September. The thing is that until late September, we are not having the FOMC, so we are going to see a lot of volatility in the yields, a lot of change of sentiment, because August and until FOMC in late September, there will be a lot of change of direction. So the 10-year is still pushing though. 4.28% is just insane. And this kind of discrepancy, it's really affecting the yield curve. The yield curve, it's basically okay, let me think how I can say this. We were inverted and we are now reverting the inversion. And the most interesting thing, the most problematic thing is when we invert. When we stop being inverted and we reach zero is when people start freaking out because something is broken, basically. When yields come down and stop being inverted and the yield curve starts being positive again, it's because the Federal Reserve usually start cutting, and because something is sick in the economy, something is broken, and the stock market basically loses all attractive, and stock market is usually is being destroyed with a lot of pain and weakness due to that change on inversion. So pay attention to the yield curve, because we are bouncing. We were at these levels between March and May, minus 0.50, 40, things like that. We have still ways to go until the 0%. But as you can see, this is creeping up, up, up until the no inversion. And the thing is, the no inversion is not bullish. This move is not bullish, because when we stop being inverted, it's because something is broken and the Federal Reserve just jumped in to support the economy, and that's not good. So that's for the dollar and the yields. What else? Small caps are being bought up today quite nicely. As you can see, the Russell 2000 is being bought up. What is not being bought up, it's Bitcoin. I don't know if you're aware of this, but there's a lot of regulation. A lot of retails are selling like crazy. Bitcoin, we can just get rid of this Fibonacci. Look at this day yesterday. Bitcoin lost 7% yesterday. And let me tell you, this is why Bitcoin crypto is super scary. Bitcoin lost 4.66% in 7 minutes. That's 1,000 and almost 300 points on Bitcoin in 7 bars. And we are not reclaiming that. We are continuing lower, and the daily is just destroyed. Look at this pump. and then they broke down again. So crypto is not longer interesting, but what we can understand and what we can learn from crypto, well, risk off is something that might be happening. This big support trend line that we got since basically since January, it's now gone. And this is something that we have to really pay attention to. So I will just, I don't know, I'm not trading Bitcoin, but Bitcoin falling minus 2.69 after a 7-day, in 2 days, 10%. I mean, it's not for beginners. And if you are not good at trading that, just don't do it. I will extrapolate that Bitcoin selling off is just a risk off in some of these assets, and also being utilities, staples, healthcare, energy in the green. Looks like some risk off in Wall Street. We might need to watch that for next week. But apart from that, the change in sentiment all this week has been quite heavily. If you were trying to buy every dip, most probably you were destroyed. We are kind of pushing a little bit now, but what I would like for you to understand, and something, if you need to learn something in this video, is just that I think big investors, long-term participants are buying at these levels. And I think it's good for the portfolio, for the 401k, for your retirement accounts. I think maybe those are good levels for some people, because at some point these tech stocks are going to be bought up. We were waiting for here, they are just starting to buy a little bit here. That doesn't mean that next week, most probably, I think we will start creeping up. But the thing is not that we are going to bounce. The thing is that that will do a lot. The change of trend is, it's basically there. The lower highs since the 16,000, I don't think we are going to see those in the upcoming months. We most probably are going to respect this descending resistance and make a lower high around here. Watch for those levels, for example, 15,300, looks like that one. And then once we establish the lower high, the change in trend, we just have to see if we continue lower on the daily with this pivot in consideration. So basically, we took 16,000, we bounced head and shoulders, flashed through the pivot, slow pullback, pivot, lower high, lower low. That's what I expect until FOMC in late September. So that's my forecast. That's what I will planning to do, at least to day trade. I have a couple of swing trades. I don't invest in Nasdaq. I have my shares in some of these, but it's just some swing trades. And I think there are better levels for big long-term investors, like this one, 14,400's interesting level. And then we are going below 14,000 on the Nasdaq. People will freak out down here, but I will still buy some of these names because I think these will be better value. Some of the people find that these are good value for them, it's okay. But I think the change in the trend, the change in sentiment, it's already here. That doesn't mean that the bear market is here. We just changed trend from a huge rally, from a little bit of pullback, an opportunity for new buyers to come in. That's my perspective, my approach, and what I think is going to happen in the upcoming months. So if you found this video useful, give it a like, subscribe to the channel. Thank you for seeing my videos and support the channel. because I upload videos every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. I put a lot of effort in these daily videos for you to understand my perspective, how I read the markets, how I trade the markets, what is my technical analysis, and for you to have a summary of when we have economic data. We provide highlights for earnings. I mean, you have a lot of stuffs in these videos that I put a lot of effort in. So thank you if you're supporting the channel. Thank you for that. And I hope you enjoyed today's video and you had a good week. Tricky, very difficult week. I hope you are in the green. And if not, learn your lessons. Take this weekend to really gather insight on those mistakes and come really fresh on Monday to continue trading these beautiful markets. So stay safe, everyone. Have a nice weekend and see you on Monday.